Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today our guest is Alex Kholodenko. Thanks for being on the show, Alex.
Hi, everyone. This is Alex Kholodenko.
Yeah, I'm happy to have you on the show. I know this is an interesting topic and that we all need to hear. And if you're not already investing in real estate, if you are, you need to understand this so you can help convince other people to invest in real estate. So a great conversation ahead, but a little about Alex. He has 10 years of experience in real estate investing with single-family homes, tax deeds, liens, money lending, and fix and flips. Also has spent the last 20 years in the high-tech software industry in the Bay Area. Now his focus is on commercial real estate investments because of the simplicity of being a passive investor, scalability, and tax efficiencies. He also co-founded Wealthy Mind Investments to fulfill his lifelong passion for helping people. Alex, thank you very much for your time, and I appreciate your focus and helping other people and helping them create wealth. But give the listeners a little more about about what your focus is right now and who you are, and maybe a little more about where you're located. And let's dive in.
Excellent. Thank you, Whitney, for having me on the show. I've been a big fan of listening to so many amazing podcasts and continuous learning. So a little bit about myself. Originally, I'm from Ukraine. And I've lived in Bay Area in the Silicon Valley for the last 20 years or so. And my background is being in Silicon Valley, you can't ignore being part of it. So I've been working for various startups and large financial institutions and other software companies, and just been really focused on my career for a long time, but always wanted to have kind of a side gig in terms of having a business where I can also take advantage of the tax efficiencies. Being in a W-2 job, as you know, there's a lot of pros, but there's a lot of cons when it comes to taxation. And for the last 10 years or so, I've studied real estate, started investing in single-family homes, tried all kind of different things in between, including fix and flips and tax liens and deeds, and really decided to focus on commercial real estate, where I've invested in over the last few years. I've invested probably in close to over 50 or so syndications. And once I started collecting passive income, the light bulb went on, and I continued to acquire more properties. And now my partner and I decided to, formally launch Wealthy Mind Investments, and we're super happy and excited to spread our knowledge and help other people along the way.
Wow. No, that's awesome. And it's awesome you have that much experience investing in real estate as well and in syndication. So I know you're going to help us think through, just like the pros and cons or why people should consider real estate versus the stock market and bonds and other things like that. And I just think as an operator, like I'm always looking to educate myself on other things outside of real estate because those conversations come up. I'm talking to a potential investor and maybe they don't know much about real estate, which I can talk about, but they may be very educated on the stock market. And I need to know some stuff about the stock market to be able to have that conversation with them. And so anyway, get us started. And I know, at the Wealthy Mind Investments, you all are helping people, all right, create wealth, and I'm probably changing their mindset about some of this stuff, but get us started with thinking about real estate versus the stock market or something else.
Yes. So this is how the idea for the business came is to begin with, you have to have sort of obviously wealthy mind to attract the wealth, right? So that's the idea behind that. And, being in Silicon Valley, you can't ignore the stock market. I mean, there's so many tech giants around the corner where I live. I can actually see Oracle from the window of my house. And, I've been investing in the stock market for a very, very long time, and I've been semi-successful. And I know many people experiencing semi-success as well. But when I started to look at what do ultra-wealthy, uber-wealthy people do, and I began to notice, major differences, especially for people in a very high, over $10 million net worth. primarily their net worth is tied to either some assets that are income producing assets or equity in the business. So they're not very tied down to the stock market as much. In fact, the middle class wealth is primarily based in equity in their primary residence. And once I started learning a little bit more, by the way, we have in-depth report on our website is the guide for busy professionals, how to evaluate real estate syndication versus stocks. I started to notice, some major differences, such as, yes, stock market is, yes, it's a very easy entry to buy in, right? For very little money, you can just buy a few stocks, penny stocks, if you say. It is very liquid. So let's say, you decide to liquidate your asset tomorrow, you just sell. You just click on the button and it's over, right? And, historically it's been doing well, right? On average is about 10%. But when you look at the bonds, it's very volatile. We've seen many companies that were Fortune 500 companies and now they're nowhere to be found. At one point, on any given day, you see the market spikes as well as downturns where you could lose, 20, 30% or sometimes even more in a single investment, right? And it is possible to lose your entire investment. Now, when you start comparing them to real estate, one of the best and biggest benefits of real estate is the tax benefits, specifically the tax cash flow that together with some depreciation and bonus depreciation and cost aggregation, that you can figure out a way as an investor to receive very tax efficient, almost tax-free cash flow. And that's what got me excited about it. On top of that, because of the appreciation and 1031 exchanges, you can defer your capital gains and income pretty much indefinitely if you structure it well, right? And one of the biggest pros also is being able to leverage, to utilize an amazing leverage system that we have in place. And the interest rates historically been very low for a very long time. And hopefully they'll continue to be that way with nobody has a crystal ball. And also having a physical asset versus a paper asset. So that's an additional pro. Yes, there's also cons when it comes to syndication specifically. It's a lot high entry point as far as the barrier to invest, right? So you cannot invest with $1,000 to begin with, right? It is not liquid. So we tell our investors, yes, there will be a hold period, a minimum of 3 to 5, possibly even longer. And there are some regulations, specific to commercial real estate that are involved, where you have to have a pre-existing condition, you have to be accredited investors, you have to qualify. And when I meet with people, I tell them, hey, I'm not telling you to cash out of the stock market and move your entire portfolio into a single or even multiple syndication, right? But as part of your overall plan, and as far as your entire portfolio, why don't you look at what other people do? Yes, you haven't been exposed to that as an option when it comes to real estate investing on the commercial side, but let's take a look and see whether this makes sense for you.
Yeah. So, just a couple of things you mentioned there. I was thinking about, owning an actual physical property, as opposed to paper or, like the stock market, if you have another crash, if you can weather that storm, most people still, their values still came back. Right. But in the stock market, if it's gone, it's just, it vanishes. Right.
Yeah, it is. I mean, it is possible. I mean, we've seen these fiascos with Enron or MCI, another company where, it's a Fortune 500 company, and all of a sudden it was gone. And some people entire 401k and lifetime savings were invested in that particular stock. And,
25, 30 years commitment to that company and invested into that stock, expecting they're going to get this big retirement. And then all of a sudden they have nothing.
Exactly, you have nothing. And, we also need to keep in mind where, we've been brainwashed by Wall Street for a very long time. I mean, you can't escape or ignore it. You see on the billboards, driving on the freeway, Prudential, Schwab. You look at the Super Bowl or any NFL commercials, there's always some kind of a promotion. We just talked about it recently with a friend of mine. Is, some brokers firms have completely dropped the trading fees. You can actually trade stocks now free of charge because I think what's happening is, and there is no official numbers for that, a lot of people started to consider alternative investments. And real estate, as we all know, is alternative investment, right? So as part of your overall portfolio, it's good to allocate some of the assets toward the cash flowing, tax efficient investments such as real estate, specifically commercial.
Yeah, I know, like the way I was raised, it was, you're going to get a good job. And then I think kind of like you said, you just assume that job has a retirement set up and that it's going to kind of take care of you. And I wasn't raised around entrepreneurs or real estate investors. And so growing up, I would have thought then, well, that, I don't know anything about it. So I'm going to stick to this thing over here that seems to be what's working or what I know most about, and so until I've eventually, took the other side, but I didn't know any better. Wasn't educated about it, but was just raised to think that's just what's safe. That's just what we do.
Exactly. I mean, I can totally relate because what everybody else is doing is pretty much the same what your neighbor or coworker does. And even if you look at your current 401k options, you're not going to find real estate there as well. And they could have possibly stick at least a REIT fund in there, but more often than not, it's 99%. It's mutual funds and stocks.
Yeah. So Alex, is there anybody that you talk to that's like, you tell them, don't put everything in real estate, or maybe we should look at some stock?
Well, don't get me wrong. I never recommend everything again to take out of the stock market and invest in real estate. I still hold Apple, for example, as one of the best performing stocks that for me. But as an overall portfolio, I tell people, why do you have a plan in place? How much asset allocation do you have to begin with? Most people kind of sort of on autopilot. They just create an allocation, 80% of the stocks, 20% of the bonds, and they never go back and figure out a way, maybe with the recent stock market rallies, it's always good to periodically at least to reallocate, because we know the crash is coming. We know that the U.S. economy is cyclical, right? I mean, the recession is going to happen. It's not a matter of if, it's just a matter of when. Hopefully, we're a couple of years or even more from that point. But we know that historically, there's always going to be a downturn after a big run-up. And we've been due for a while, and we've defined the odds for a long time. So when we have the conversation with my investors, I tell them, upfront, I don't have a crystal ball, but here's what I'm doing. Here is what I recommend that you do. And then we take the conversation to how we can implement and how we can help them when we have something to offer.
When speaking to somebody that's only invested in their company's 401k or stock market or mutual funds, bonds, whatever it may be, what's the biggest rejection that you get, or something that maybe as a real estate investor, and speaking to investors that we should be prepared for, when having that conversation with a person that hasn't invested in real estate, what are some rejections that you hear?
I think the number one rejection, a lot of people didn't even know that it's a possibility, right? So I'm going to have, for example, a webinar next week on a topic that you can actually invest your retirement funds into real estate, including syndication. A lot of people don't know that. And obviously, Fidelity, Schwab, or E-Trade are not going to be able to help with that. So first of all, they're kind of in denial. They don't even know that it's an option. The second option is obviously there's fear involved in terms of, is this even possible? When I try to explain people, oh, by the way, you could co-invest as little as $50,000 into a large apartment syndication along with other people that are experienced, that know what they're doing, with many years of experience on the sponsor side that will take care of the rehab work, and you can be totally passive investor. A lot of people have a shock in terms of understanding that it's even a possibility for them. And after educating them and after giving them testimonials and stories and my personal track record as an investor myself, people do open up, but it takes time. Many people, we've had multiple conversations until they got comfortable and most importantly educated about that option.
Is there any specific thing that you might help somebody with to help educate them, or maybe a specific book that you might give a potential investor or something like that?
Yeah, so we actually do have a free report for busy professional that goes in depth, including charts and some comparisons for real estate versus a stock market. So if you go to our website, www.wealthymindinvestments.com, we have that as a free report as an option as well.
I like the quote that you'd said when we first came on. You talked about have to have a wealthy mind to attract wealth. And could you speak to that a little more, just about having a wealthy mind, and maybe how you developed your mindset towards that?
Well, sure. I think it's a never-ending battle because there's so much negativity outside. You just turn on the TV, and then, let's be honest, negativity sells and attracts more publicity and attention, right? But in my personal self-development journey, one of the big turnarounds and the breakthrough that I had personally was when I attended Tony Robbins' event at UPW back in 2014 or 15. It's been a while. And ever since then, my mind kind of shifted and focused on being more grateful. I wake up with a sense of gratitude. Every morning I prime, if anybody is familiar with that, morning routine, and just being in abundance and in gratitude. And because end of the day, you can't attract wealth if you don't have the mindset set up correctly, right? So if you're positive, if you are outgoing, if you're upbeat, enthusiastic, at the end of the day, like attract like. So it starts with a mindset, and then ultimately real estate, that's what we chose as a vehicle to help other people to create that wealth.
Couldn't agree more. And I would even go a little further and say even, I could tell a big difference even changing my nutrition. That it changed me my mindset to the extent of being able to just think clearer, and I just, being able to remember things better and be able to focus better, be more clear, made a big difference as well. But sure. Yeah, definitely morning routine is so important. So, Alex, what do you tell somebody that's that busy professional right now that's thinking about, the syndication business, and how should they look at that first investment? And getting into real estate, because they're a little nervous. They've been investing in the stock market, whatever. Okay, they're comfortable with that over there. Like you said, all their buddies, coworkers are doing that. But now they're thinking, okay, I'm ready to venture out that first time into passively into a deal.
Yeah, so get educated. I mean, there is a lot of free resources, including our website. You have an amazing podcast. You interviewed so many people. Attend a few meetups, local meetups. Talk to real person as well. We're happy if you're in the area to meet up in person as well. Sometimes we go to conferences and travel. I'll be in Texas actually next week, and just meet with people and get around like-minded people, that have been around the block, that they have done some of the deals, and that they can show you their track record, and they can show you all the pros and cons and what you need to look for. So just get educated to begin with. We never tell anybody to rush into the deal. There's always other deals that are available. But at one point, once you get educated, you can't sit on the sidelines either. So at one point, when you get educated and feel confident, you need to actually pull the trigger and start investing. That's how you build track record yourself, right?
So how do you prepare for the potential downturn that everybody's talking about, and even you and I briefly discussed earlier?
Yeah, so we are looking for very conservative deals right now. So what I mean by that is we avoid bridge loans altogether. Whenever I see the deal that has a bridge loan, I'm like, what, this is not the right time to do that. So this is a short-term and a more riskier type of deal. That's one. Second, we'll look for a cash flow perspective that will have a deal that will hopefully start paying off the cash flow upon the acquisition within a month or two. So we don't like the deals that have projections that there is zero cash flow 6 months or a year or so. So we invest for cash flow, and we treat appreciation as a kind of a bonus, right? And we also look for experienced operators and syndicators, the people that have 15, 20 transactions under their belt, that can sustain a downturn, because when it does happen, I think because you've had experience managing many other properties, you can weather that storm and being able to hold until the storm hopefully over, so you'll be able to execute on your business plan. So these are the things that we primarily focus on: cash flow, experience, and conservative underwriting. Because as you know, you can massage any deal and look amazing, right?
Right.
But being able to have a conservative underwriting with experience and having that cash flow sooner rather than later is a big factor for us.
What's a way you've recently improved your business that we could apply to ours?
So what we've done with my business partner, Ashish, is recently we started to scale our business in terms of creating automation systems in play. We started to utilize Active Campaign. So we're putting together emails, newsletters, a webinar that I mentioned, how to use retirement funds into real estate. And we'll continue to also improve our social media exposure. So we're outsourcing some of the deals because obviously some of the work, we're so busy, we still have day jobs, we can't do everything ourselves. So we'll continue to juggle the multiple balls, being an entrepreneur. That's how the life is, and we continue to make strides and make progress.
Awesome. And Alex, I normally ask, especially operators, the way that they care for investors so that they, want to return to the next deal. But from your seat, you've invested in so many, and you're so well versed in the syndication business. I'd love to know, something that stood out to you, maybe a couple of things that different operators have done, maybe one specifically, something they've done that made you really want to invest in their next deal, other than obviously great returns. But maybe a couple of things that it was like, okay, this operator really stands out. He knows what he's doing. I like this.
Yeah. So there's a couple of them that specifically I look for the transparency, right? So I'd like to know, even if the deals does go bad or maybe underperforms for a quarter, I'd like to have consistent updates. That's what I'm looking for. I'm also looking for somebody that I have a good relationship, that I can email or I can call and ask questions, and my questions are being answered. So the transparency and responsiveness is very important to me.
For sure. Yeah. What would you say is the number one thing that's contributed to your success?
It's the mindset. It goes back to the mindset. I mean, again, you can't transpire something without first seeing it in your eyes, right? Seeing it in your mind. So if you can, Bob Proctor is a very famous self-development person. I read many books. He has a saying that if you can see it in your eyes, you can have it in your hands. So if you can picture something, envision that brighter future for yourself, then you will get to it. Obviously, there's work that needs to be done in order to get what you want, right? But it all starts with the mindset, with the vision.
Yeah, I think that visioning something like that just helps you to change your mind, doesn't it? Or your mindset. And yeah, there's so much there in the mind that's so powerful. I can't agree with you more. It's so important in anybody's success. But well, Alex, thank you very much for your time today. And it's such an important conversation too, and something that we all need to be versed in as far as why real estate or versus stocks or other assets that we could invest in. All right, Alex. Well, how do you like to give back?
Okay, great. That's a good question because I do believe as part of contribution, everybody needs to contribute beyond themselves. So there's a couple of things that I support to a couple of organizations. Number one is cancer research. My partner and I, unfortunately, lost our fathers due to cancer. So as part of our dedication to building this business is we donate 10% of our income for each syndication acquisition that we create. And the second one is I have a good friend of mine, Ian Griffith, and he has a project Gratitude where pretty much every Friday we do go to San Francisco downtown and we provide free meals to homeless people.
Wow. Thank you for giving back in that way, Alex, and appreciate your time today, and tell the listeners how they can get in touch with you.
Yeah, so please go to my website, www.wealthymindinvestments.com. You can download your free report specifically for busy professionals that goes in depth on the differences between investing in stocks versus real estate. You can also contact me directly at alex@wealthymindinvestments.com. And there is an option to schedule a one-on-one call with me as well.
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.